Hello, welcome to this week's live Q&A. Ask Andy. This is your chance to ask me your money questions. I will do my best next 30, 40 minutes here until about 7:35, 7:40 p.m. To answer as many of those questions as I can. Now, as we found the last couple of weeks, there's been loads of you and loads of questions, which has been fantastic. I really love to have this interaction with you. But it did mean some of those questions in the bottom I didn't get time to get to. So if you've got a question, asking it early is always the best chance for me to answer it as best that I can. So do say hello when you join. Love to know who you are, what you're up to. So do just give me a little hello and what you're up to. That'd be lovely to have. Here on Instagram, guys. Hello, guys, on Andy Clever Cash Instagram and over on YouTube as well on the big camera over here. So yeah, I'll be looking between the two. If you're wondering why I'm not looking at your camera, it's because I'm on one of the two options. So we've got Evelyn and Heidi over on Instagram and Colin on Instagram as well. Nice to see you guys. And already we've got Hedwig, Wayne, Phil, Charles and Elsie over on YouTube. And now Wayne's actually got a question to kick us off here. And Wayne's asked, in my opinion, is Amazon Prime Video better than Now TV? So there's lots of things to come into play here, aren't there? You're looking at the content and you're also looking about the value for money, the cost and the value for money. It's three things. What the content is, how much it costs, and then from those two, you get that value for money. So I would say in terms of the content that's available to you, in terms of how much is available to you, then Amazon Prime Video does have a huge amount on there. And it does have a lot more really good original stuff on there as well. Some really good shows. Marvelous Mrs. Maisel is really good. The Boys is pretty good as well. I'm sure there are other things I've watched that escape my head. Upload, that was really good. Loads on there. Plus you get TV and you get films and you get sport as well. Because obviously they have a lot of the tennis. They have the US Open, I think. And they also have a couple of Premier League rounds in the winter, in December time. So a couple of fixtures there. So you get the full lot for, depending on how you pay for Amazon, $7.99 a month or £79 a year will give you the full Prime package. If you just want the video, it's $5.99. For a video service, $5.99, the amount you get in there, that's probably the best, the cheapest one you're going to get for the amount you get. Just get the video, none of the other Prime features, $5.99. I think that's really, really good value. Now TV, on the other hand, has a bit more complicated. So this is if you want to get your Sky Atlantics and your, God, it's confusing now because they've changed a lot of the channels around, haven't they? Sky One is becoming Sky Max from next week. Fox disappeared, Discovery disappeared. But anyway, if you want to get those channels, then you have to buy different passes. There's the entertainment pass, which is your normal kind of TV channels and your kids channels. That's $9.99 a month. So already more expensive than Amazon. There's a cinema pass, which is your Sky Cinema channels at $9.99 a month as well. So that's 20 quid if you want both of those. And then the sports is on top of that as well. Full price, £34. All that together is very expensive and potentially more expensive than going through Sky. However, I've been using Now rather than Sky for 7 years, I think, something like that, for a long time anyway. And I don't pay full price. I never pay full price. At the moment, I've just literally published an article today looking at those alternatives to Sky and how much they are and how much I pay for them. I pay about, on average, 1-2 quid, maybe 3 quid most for an entertainment pass with Now. So that suddenly makes it a lot cheaper as well. And you get shows on there which are essentially like must-sees. There's one I haven't watched it now. I think it's called The White Orchid, which has got rave reviews. That's just come along. Lots of our big HBO shows are on there. So what I would suggest to you is don't pay for both of them all year round. Just mix between them. So have 1 month you get Amazon Prime Video. Watch all the stuff you want to watch on there. If it takes you 2 months, you have 2 months. You watch everything you want, cancel it, then go on to your next service. Give Now TV, the entertainment pass, a go for a month. Watch everything you want. Again, however many months it takes for you to watch everything, do that. Cancel it. Move on to Netflix, to Disney, to Apple, all those shows. Have a couple of months where all you're using is iPlayer or whatever it might be. So give them all a go. I think they're all worth having, all the streaming services at some point, because there's always content worth watching. What I would say is not worth having all of them at the same time. So loads more content, all of that over on becleveryourcash.com and on the YouTube channel if you do want to check that out. Right, it's loads more things going here. So there was a catch up on some of these things. Heidi has said, hello Andy, just done my nationwide switch. Fantastic, great news, well done. Hey to Natalia and Simon as well. Who else has done their nationwide switch? I've done it, and I've done it twice. If you include my wife, I've done it 3 times. This was something new, which I don't think I shared with you last week. It's something that I checked up on afterwards from a question from I don't know if they were a viewer or a listener or a reader, but someone who follows me somehow. They want to just double check exactly what the terms and conditions meant. And I thought you got it once per person. That's it. Turns out You can get it once per person for your individual account, a personal account. Switch that into a nationwide account, you get the bonus. But you could also get another bonus for switching into a joint account. Now, you can only get that bonus once per joint account. So it doesn't mean you can both get that. If you've got a partner and you've got a single account each and a joint account, you won't get 4 bonuses, you'll get just 3. But anyway, that's a little update for you from last week. So good news there. Hi to Claire as well. Lovely to have you along. Guys, you are welcome to lurk, but if you've got questions, do just give me a little shout in the comments. Tracy has asked, how did I do in the pub quiz last week? I got them a little bit late because I was with you guys a little longer than I was meant to be. And we did okay. We didn't win, but we weren't near the bottom either. It was a pub quiz which was achievable. Do you know what I mean? I hate when you go to a pub quiz and it's impossible. Like all the questions, it's the quiz master sort of showing off and they just want to show how intelligent they are. And nobody can answer it. And everyone gets 1 out of 10 on every round. It wasn't like that. But at the same time, it wasn't too easy or super easy. So I think we'll go back again. But it was fun to do it. I've not done a pub quiz in, God, before that, must be gone on for 2 years. Definitely 2019. So going back a long time. Adam has asked, how are my premium bonds going? Premium bonds, no update from where I was last week because the draw for premium bonds is just once a month. So there will be another one. Not, next week. Yeah. So I would guess, Wednesday, Thursday, Friday, there'll be a draw for premium bonds. So that's when we get an update and see how things are going. At the moment, they're doing pretty well. But as I mentioned last week, so I won't repeat myself now. If you didn't see it, check out last week's live. The increasing interest rates we're seeing on 1-year fixes now means you can potentially, if you're happy to lock your money away for 12 months, you'll be guaranteed to get a certain rate, which is likely to be more than you would get in your winnings from premium bonds. No guarantees with premium bonds. You could get more, you could get less than the average rate of luck, but that rate is higher. Still pretty rubbish compared to the rate of inflation, compared to what things were just, 12, 24, whatever it is, going back different months and different years. But it's definitely something to consider. And I'm definitely keeping an eye on that and wondering whether I do move my money out of premium bonds, but I will let you know what I choose to do. So Abdallah has asked, good evening, hope you're well. How is your day going? That's very good. Thank you. Been busy working away. Writing my Reader's Digest column today. Actually, I do this every single month. So it's really nice to do. Obviously, mainly do my own stuff, but it's nice to have a published outlet as well, kind of established one out there to keep doing that, which is really lovely. But anyway, so Abdallah has asked, any advice for motivation on going to the gym? I can't be bothered. If anyone's got any tips to help Abdallah get to the gym, please put them in the comments below and he can read them. And hopefully that will get him there. Will has asked, what reward credit card would you choose if you already took advantage of the Amex Reward Gold? I don't fancy the £140 fee for the second year. So yeah, this is, if you've watched my recent videos or read the articles over on the website, the American Express Preferred Rewards Gold credit card is my top pick for brand new American Express customers. As in, you haven't had a card in your name, like one that you own, in the last 2 years. As long as that's the case and you've got £3,000 you can spend in 3 months, and not everyone's going to be able to do that. I know that. So maybe there's a big expense coming up that you could take advantage of. You can get a fantastic welcome bonus. Ultimately, that's worth 186 quid, free money, just for your normal spending. However, as Will says, at the end of year 1, you will get charged an annual fee, 140 quid. It's 0 in the first year. And it's not worth paying that. Very, 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 very few people are going to benefit from the things you get from that with that kind of fee. I wouldn't do it. So what I would do then is just ignore the other welcome bonuses, because you're not going to get a welcome bonus if you're switching to another American Express card, and look for the one which pays the highest rate. And right now that is the American Express Nectar credit card. This will give you 2 Nectar points for every single £1 that you spend. I always get frustrated with Nectar points. They're always a bit annoying in terms of convert them when you say, hey, look, here's 200 points if you buy this. And you're like, oh, and it hurts your head, doesn't it? To work out exactly what that is. But essentially, 2 Nectar points is the equivalent to 2 pence, right? So you're getting, 1 pence. Oh, God, I confused myself. 2 Nectar points is the equivalent of 1 pence, which means you're getting 1% back on purchases with this card. You cannot beat that 1% anywhere right now, apart from big spenders on the American Express Platinum cashback credit card, but you've got a lower rate before that. So realistically, I would say go with that Nectar credit card. If you go via Quidco or Top Cashback, I think it's only on one of them. I can't remember off the top of my head which one. I think it's just on Quidco, but check them both out. You'd also, when you apply, be able to get a small welcome bonus of I think it might be 20 or 30 quid. The rates do go up and down. I haven't looked for a few weeks now, but you may as well do that. And that knocks out the fee which comes in year 2 with that one. So that's definitely well worth considering for your next year after the gold card. Tipsy says hello, or Tina. She's already with Nationwide since 2002. You can still take advantage of that switch-in bonus, Tina, though. You can get an extra 25 quid, in fact, if you're a Nationwide customer. You get 125 quid for switching another bank account into it rather than £100 if you're completely new to Nationwide. Loads more of you joining in over on Instagram. Hi to Astir and Deals and Graham and Roberto and Bascotti and Kamal and to Windsor. Nice to have you guys joining me. It's always lovely to connect with you. Sticking with Nationwide, Derek has said, really hoping Nationwide improve their app. It's so basic and dated. Yeah, that's the issue I have with Nationwide. I think it's a fantastic current account. It's a building society, not a bank, but essentially the current account works exactly the same way. But actually, because it's a building society, the way that it uses the money that that's with it, and however it's got that money from your current accounts, your savings accounts, whatever it might be, that money is invested in people on the majority who are going to be in mortgages, lending to people who are going to be buying houses. Unlike a lot of the other places, your money can be used for all sorts of things. So actually, as an ethical option on the high street, it's really, really good. And I've always had good customer service from them. But that app is really, really frustrating. And it's the reason I moved over my day-to-day banking to Starling. I really hope they get their act together, and I would absolutely go back. Basically, they've got a card reader as well. I know it's a tiny thing, a small little thing that shouldn't make a difference, but when so many other banks do, and they've got the security systems behind them that you don't need a card reader, it is really, really frustrating. What have we got here? So Daniel says, evening Andy, any reason you know why credit card company won't offer a credit increase? I've had a Sainsbury's card for 4 years and never been offered an increase, always paid in full. So every credit card company will have its own lending criteria on what they want to do in the first place, but also as time goes on. So I've had that. I haven't tried for a while now, but I had a similar thing with my John Lewis and Partners credit card. I use it because I shop mainly. My local supermarket is a Waitrose, and I can get 1.25% of my purchases. I've got that, and it's also a handy backup for when my Amex doesn't work, because you get 0.25% back on non John Lewis or Waitrose purchases. But my limit is just it's relatively small. It's just around £1,000, right? And this is really frustrating because if there's a big purchase, remember we tried to buy a sofa a while ago, a year and a half ago, which was over £1,000. They didn't take Amex. They wouldn't let me put it all on that card. No, that was fine in a way, because for this consumer protection, I only need to put £1 on that credit card to get that, but it meant I lost out on some of the extra sort of points that I would have got. So it is really frustrating. I would say if they've never actively offered it to you, it doesn't mean you can't get one. Maybe it's worth inquiring and just asking and see what they say. But it could just be that they're particularly sort of not keen on increasing the limits available to you. I wouldn't have thought they'd be doing a new look at your credit report again. They wouldn't do that for a credit increase. So they wouldn't see what other things you've got going on, how your credit utilization works with other credit cards. But again, if you're paying it off in full every month, that shouldn't be an issue either. Over on Instagram, Kamal has asked, wants to know if stocks and shares ISAs are the best place to start before looking to invest in property, etc. So I'll give my kind of standard kind of thing that I say here when we talk about investing, is that obviously investing is something that your money can go up and down, and it can be, money is always at risk, however you do it, whether it's in stocks and shares, whether it's in property, whatever it might be. And often this kind of thing where you have to give like regulated advice. So I can just give you my thoughts on this, but it's not advice. I can't tell you what to do. That's up for individually for you to decide and maybe seek some professional advice on this. From a personal perspective, I would say it's a really tricky one here. Obviously, when you're investing in property, I assume you're talking about additional properties rather than your own one. Having your own property, first of all, putting your money into that is an investment, because you're hoping it will increase in value. And when you sell it on, you'll have more equity and you can buy somewhere bigger and kind of work your way up through all of that. Plus, it gives you a certain element of protection later on. You're not paying rent. Once it's all paid off, it's all yours. So that ultimately, absolutely, I would say is a really good thing to think about. It's also difficult to say the market is where we are right now in terms of housing. You would think it couldn't get any higher and higher, but it has been growing and growing and growing. I think it sort of stagnated a little bit recently, and maybe a small dip in some areas of the country. And now that stamp duty holiday is finished. Or, well, it hasn't finished. It's sort of tapered down, so it's not as large as it was. But there are all sorts of other risks associated with property investing as well. It's less tax efficient than it used to be. There's more costs that you have to take into account there as well, such as refurbishments if they need to. You might have periods where you don't have any tenants in there, in which case you still got to pay it, but no one's paying you the money. So there are a huge number of risks associated with property. Stocks and shares ISA. Again, though, there are so many different options that you can put into a stocks and shares ISA. You can go for some really, really risky investments, which might make you a huge amount of money, but they could lose you a huge amount of money as well. But there are potentially safer or steadier options. There's still the chance of value going up and down. There always is with these things, but hopefully that's mitigated in how you do it. So it's probably not the best answer there for you, Kamal. I don't know if it's helped you particularly. I guess it also depends how much money that you've got available to you. If you've got a huge amount of cash, then why not put some in stocks and shares, some in property, and some, who knows, wherever you want. Maybe a little bit in crypto if you're interested, but not too much. But I would say for now, it wasn't a great answer, that one, wasn't it? Well, I hope that's helped you kind of sort of think about the things you need to consider. I would just read a huge amount about this from reputable sources, okay? Don't just go on TikTok or elsewhere on YouTube or Instagram and look for people who are saying, yeah, do this, I've made loads of money. For something like this, I would make sure you really, really understand it and go to some proper publications where you can know the information that's given is balanced. It's not just someone who's just discovered it for themselves for the first time. What else we've got going on here? Hi to Jules and to Adam and to Barry and to My Life. Nice to see you guys here. Let's head over to YouTube. Loads more things going on here. Andrew says, hi mate, I've switched to Nationwide for the bonus. Fantastic. I have a Flex Plus debit card which gives me fee-free spending abroad and Barclaycard reward credit card. Do I need a Starling account or not? So if your reason to get a Starling current account, which is one of my top picks for current accounts, is the fee-free spending overseas, then no, you're covered. I don't think you need it. You've got two cards to sort you out when you're overseas, the Nationwide and the Barclaycard. So if for some reason one's not working or one gets stolen, always maybe have a backup wallet in the safe at the hotel. Happened to me years ago in Argentina, got pickpocketed and I had my wallet taken, and which was, it's amazing how good they are at doing this kind of stuff, because I'm onto this and watching out, but they still managed to nick it. But fortunately I had another wallet in the safe at the hotel with other cards, so I wasn't completely stuck somewhere with no way to pay. So you've got two cards, that's fine. I don't think you need a Starling for that. However, if you want to try Starling or Monzo for that matter, for the extra features you get from the app and the extra kind of easier way to look at your spending, to transfer money, to all these little things you can do, see your card number on the app. I know lots of other banks are catching up with this, but that's a reason to try it. The fee-free spending, if you've got other options, then you don't need to worry about it too much. Adam has said, I just looked back on your last video and noticed you're 100 up for the year. I remembered I had 8,000 in for a while in bonds and didn't win a single penny. So this is back to the premium bonds there. Adam just showing that he had no luck in there. And that's the thing. There's no guarantee with these that you get any money. And the more money you put in there, the people who win the big prizes most months, like the £1 million prizes, you can see a list of who's got it. They've normally got 50 grand in there because that is 50,000 entrants into that draw. So they're more chances of getting the top prize than someone who's got 25 or whatever it might be, or even 8,000. So that does tend to work like that. Andrew has got another question, and he says, is there a best place to save 150 quid a month with instant access but not Chip Plus One? And on that note, Chip Plus One is ending for new customers, new applicants at the end of this month. So in a week's time, next Tuesday, 31st of August, it will be closed from then to new people. Now, I don't know what that means longer term. Does it mean that Chip are going to come through with a different option? And I'm sure they will. There's sometimes been like months with nothing, but most of the time since they've existed, there's been some kind of incentive to sign up to them. Now, maybe they feel they've got enough people now because they've been growing quite a lot that they don't need to do that. We've seen that in the past from likes of Monzo. Used to offer a £5, didn't need to do that anymore. Just join up if you want to. And if you don't want to, well, then you don't sign up. So I don't know whether you should rush to get this Chip Plus One account right now before that deadline, because if you miss out and rates start to fall again, then maybe you won't have access to that account. But I don't think rates are going to fall so suddenly. As I said, already some of those 1 year fixes are beating that 1.25% you get with Chip. Plus, actually, really, the real interest rate you get with Chip isn't 1.25%. Over £2,000, it gradually, after £2,000, it starts about minus because the fee knocks out the interest you made and eventually works up to 1.06%. So it's not really a 1.25% account. Yeah, I would maybe hold off because I think there are other options now and there might be a new bonus. And once you've signed up, whatever else they come up with, you won't be able to get. You'll miss out. But it's up to you. If you want to make sure you get it, make sure you do that in the next few days. There is a link, a special code over on becleveryourcash.com. So go there and search for Chip and you'll see an invite code that will get access to that account. Now, obviously, Andrew's not asking about that particularly. He wants an alternative to that, 150 quid a month with instant access. There are some regular savers where you don't have to lock that money in for 12 months. Can't tell you them off the top of my head, but I have got a list of them over on becleveryourcash.com. So head over there to check that out. If you haven't already got a Virgin Money M Plus current account, remember you can have multiple ones of these, you actually get 2.02% on the first £1,000 you have saved. So if you don't have any savings, 150 quid in there, only that 2.02% is great. Next month I'll have 150, next month 150. So what are you looking at? 7 months, roughly, 7-8 months before you hit that £1,000 cap. And then you can always open up another one if you want to. So Deals has said, on over on Instagram, I have an old Asda credit card, now known as a Creative Card, with 1% cashback I pay off every month, but won't up the limit. As I said, they are not doing it until COVID credit stuff works itself out. So that's useful. So there could also be an element where the different places are being a little bit more cautious right now, still during the pandemic, and not increasing credit to people. So that could be something that's going back to earlier on. We talked about the Sainsbury's Bank credit card. Someone wanted one of those, wanted a higher credit limit, wasn't having it. So Andy Dawson has said, I've just been gifted £10,000. No debts. What should I do with it? Oh, that's a great question. What would you do with £10,000? Maybe that's a question I should ask you guys another week. No debts. Fantastic. Have you got an emergency fund? That's the most important thing here. And this is the kind of a stash of cash that if you lost your job, couldn't work, whatever it was, you can pay the bills, you can pay the mortgage or the rent. You're not going to be kicked out or without heating or whatever it might be. Okay, so that's the most important thing. Make sure that is available to you, easy access, so you can get it. And general rule of thumb there, 3 to 6 months, you might feel you want more than that. Next, we'll say, is there anything else you're actually actively saving for that you know that you want to be doing this year, next year, year after, some relatively short term, next sort of 2 to 3 years, something you want to buy, well then, put it aside, towards that, or maybe even to cover it, depends on when you need to buy it. So that's the next thing. Beyond that, if you're covered for those kind of emergency savings and you covered your debts and you've nothing else you need to buy coming up, then potentially it's a really good idea to think about investing it, particularly with the returns where they are right now. And then you can, again, minimum of 5 years is the kind of the rule of thumb there for how long you should be investing for, because markets can go up and down. But in theory, in a 5-year cycle, you've got enough time, if it does drop, for it to come back up. Obviously, if it was to happen in year 5 and you need that money in the 5th year and it had dropped, a crash had happened, and it would have lost a lot of its value. So you'd obviously want to take it out closer to when you actually need it to avoid that actually happening. So that might be a good thing to do, is talk about investing some of that as you go along. If you do want to keep all of that in cash, then I would head over to the most recent video I've got on savings on the YouTube channel, or the article on becleveryourcash.com, taking you through the best savings accounts. I would still say for the moment that the Chip Plus One is probably the better option. But if you're happy to fix it and put it away for 12 months, as I said, there are a number of fixed accounts. I think it's 1.35, 1.36 is the best 1 year fix right now. Literally going back 5 weeks ago, it was under 1%. So those are gradually increasing bit by bit. Hey to Ojo and to L888 and to Josh. Nice to see you guys. And then Ashley says, Andy, you answered my question via your YouTube channel at the end of last week. A follow-up question with another one. If I apply for an Amex and a Barclays Reward credit card, will that damage my credit score? So I get asked this a lot on Instagram, on YouTube, all over the shop. People are saying, what will happen to my credit score if I apply for these things? Or why has my credit score dipped after my applications? And this is simply because when you apply for anything where a credit check happens, so obviously that's going to be credit cards and loans and a mortgage, but it could also be things like a new mobile phone contract, or switching your energy on a direct debit meter, or opening up a new current account, you will likely be credit checked, and that credit check will appear on your credit report just as a check. It doesn't say whether you were successful or not, what you applied for. It doesn't say necessarily what you got in that, whether it was just a bank account or a mobile phone contract, or whether it was a credit card or a loan. It doesn't say any of that kind of stuff. It just shows up as a search, a hard search on your report. And this is why when we talk about soft searches, particularly with credit cards, why they're so important, because they don't appear. That will have a small impact on you. Okay, so yes, if you apply for 2 cards at the same time, that will see the first application will go through. The next application will go through on the basis that you also just apply for some credit. And the same for current accounts. If you're doing a couple of applications very soon to each other, the risk you've got here is that the next people who are looking at your report to lend to you or give you the account or whatever it is, they might go, hang on, why are they just applying for some credit? Did they get rejected? Or are they desperate? You know, they've already got something and now they need more. Is there something we're not quite sure about going on here? And that might make them more likely to sort of look at that second application or that third application, whatever it is, and kind of go, hang on a minute, let's just wait and see. So if you don't need to apply for things really soon, close up to each other, and particularly also if your credit report, if the score which reflects the credit report is maybe a little bit lower, if it's not perfect and you're trying to build it up, then maybe you want to space it out, give it a month, give it 6 weeks, 2 months, whatever it is between those applications, just to give your report a bit of time to respond to that previous application and recover a little bit. If you're not worried about it, I've certainly had times where I've applied for a credit card and a bank account, possibly even 2 bank accounts, and switched my meter all in the same month. And yes, it's dipped my score down a little bit, but it hasn't made an impact because I'm not applying for anything big. If you need like a mortgage coming up, remortgaging your first mortgage, you want to avoid any applications. If you need a really important loan or financing, say on a car or whatever, or a 0% balance transfer credit card, then they're the things, they should be priorities, and maybe you don't worry about the other stuff as much. So hopefully that's helped you. Hi to Simculus over on Instagram as well. Nice to have you joining us. Chris Kemp has asked, have you heard anything more regarding the Monzo situation? So Chris is referring here to, I think it was a couple of weeks ago I spoke about this. This was in Monzo's annual report. They shared that they, once again for the second year running, there are some big worries about their finances and their ability to continue as a business, which you think, whoa, red flag, and let's cancel my account and get out of there. In reality, I think it's less of a worry for us as punters right now. If we're using Monzo and we like Monzo, we should stick with it, because if you jump ship, then it's even more likely to go under. And if you stick with them and it does get into proper trouble where it can't survive, I can't guarantee this, obviously, but I would imagine that they would be either snapped up by someone else who would want to keep them running, who has the infrastructure and the funding in place to make it work. And you would just carry on and you wouldn't even see much of a difference, but maybe even then you make a choice then if you want to stay with them or not once that had happened. Or if worse came to worse and it did go under, if they couldn't survive and they just turned off the accounts, right, that's it, we're done. Your money is protected. Yes, it's going to be massively inconvenient, which is why I always recommend, not just for Monzo, but for any account, I recommend having 2, 3, 4 different current accounts and having access to money in all of those. But it's that ability to receive cash, to send money out, to access savings, whatever it might be. You can still do that. And in the meantime, you will get your money up to £85,000 back from the government. So no updates. They're still going on. They're still running. They're still trying to get customers. So I wouldn't worry about it too much right now, but it is worth having it at the back of your mind. And I would say setting up those precautions. But as I say, with every current account, I would recommend that you do that. Tom Score has said, have I used Zilch? Don't use the buy now, pay later, but the 2% cashback is paying in full. Sounds too good to be true. I don't know about Zilch. I will write that one down and I will have a look into that, and I'll either make some new content or we can come back to it next week. Certainly I would say if it's buy now, pay later, be very, very careful. But if the choice not to use that, but to use a cashback option at 2%, it could be worth considering. Yeah, I will look into that and get back to you with more information. Tracy has asked, is it worth changing from Barclaycard Freedom Rewards card, a points-based 1 point per £1 to in supermarkets, £25 voucher, I assume you get that paid out in £25 voucher, to a cashback rewards card with them? So it depends what the point is worth. If the point is worth 1 pence per pound, that's 1%, that's really good. If it's worth 0.25% per pound, then it's exactly the same as the rewards card, but you get the double points in the supermarkets, although all the middle-aged supermarkets will take American Express, so you should be getting 1% on your cashback in supermarkets, or even beating that if the supermarket has its own credit card offering more. So I think that's the thing you need to look at there. Do the maths, work out exactly what you would get for your spending, and then look at what that would be with the Barclaycard Rewards. That's 0.25% with the Barclaycard Rewards card. However, I would say often there is an issue. If you already have a credit card with a company, they might not then give you another credit card. Now, maybe there's a fault. Maybe there's something wrong with my profile. But when I go onto the eligibility checkers, that Barclaycard Rewards card, because I have an old Barclaycard from back in the day, it used to have my Oyster card on it. It's like the first Oyster card was a Barclaycard. You might not know that, but I had that. So I was tapping and paying on the tube before everybody else was. That I'm actually ineligible for this other Barclaycard Rewards credit card. Now, if I close down the other one, maybe I'll be eligible for it, but there's no guarantee. So you'd also want to make sure you have a look at those eligibility checkers or do a soft application, probably directly with Barclaycard, before you make a full application, just to see whether you're likely to get it or not. So what else we got here? Charles has said, regular savers, are they worth it? And are there any you would use? So a regular saver, I think it might have been Charles, it could have been someone else, asked me about this the other week and was a bit confused about it. And this happens all the time. People get confused all the time about regular savers. Because when you say there's a regular saver that's paying 3.04%, which is what you can get right now with NatWest and RBS's digital regular saver, albeit only on 50 quid a week. But if you say you can save, you can get 3.04% on up to £1,000 on that account, well, you think 3% of £1,000 is 30 quid. So you would earn 30 quid, right, in a year. However, it doesn't work like that, because a regular saver, the whole point behind a regular saver is to put money aside every single month. Sometimes they're called monthly savers. So yes, at the end of the year, you'll have X amount in there. But in month one, you've only got that first amount you put in. In this month two, you've only got the next amount. So if it's, again, that 50 quid one, month two, you've got at most 100 quid in that account. So that's 3% of that. And you kind of chunk it all together and add it all on. There are some really good calculators out there. Money Saving Expert's got one which you can go to, and it can actually tell you exactly if you're going to put away £200 into account, paying 1% every month, what you would get at the end of the year. And I've got a whole article explaining how they work over on the blog and a video on YouTube as well. So check that out if you're not sure. What I would say is, sadly, right now, the rates aren't fantastic. They used to be amongst the highest paying interest rates out there. You know, regularly the First Direct and HSBC ones were paying 5 or 6%. I mean, literally just going back 18 months. Even 2.75% was a regular saving account rate that you could get, which is beating everything else. Now the majority of them are around 1% or less. The ones that do beat it, there is a new one with, I want to say, Skipton Building Society, which is only for customers who already had some kind of product with them by, I think it was like the middle of August of this year. And you can get 3.5%, which is really good, but you have already been with them. So if you were with that bank, and you can double check what it is, and other banks might have these loyalty things as well, then that's great to go for. I think if you've got a NatWest or RBS current account right now, you may as well open up one of these accounts and put 50 quid into it every single month. Now, some people tell me that they have put £1,000 in there at the start, like when they opened it, and they have earned interest continuously on that amount of money. So that might be worth giving that a go. The worst that's going to happen is they're going to say, no, we're going to take that money out. You can only have 50 quid in there. And after that, the most you can put in is 50 quid. I haven't tried this myself, but it's worth giving that a go. But otherwise, I think actually, Charles, right now, there aren't that many regular savers which are kind of top of the board for me, I would say. Although they're great if you want to that habit of saving every month, then they're pretty good ones to go for. Tracy says, do things like Samsung Pay or Google Pay stop you from getting Section 75 protection? So this is really interesting. Section 75 protection is something that's actually enshrined in law, and the Consumer Credit Act of, I want to say 2015, maybe. 2005, I can't remember, right? Recently, in the last couple of decades, right? What it means is that if you pay by credit card, even just £1 of a purchase on a credit card, as long as the cost was 100 quid at least, and I think the maximum is £30,000. It costs between 100 quid and 30 grand. You pay with a credit card, just some of it by credit card. If something goes wrong with your order, it doesn't arrive, or you get it and it's faulty, you don't have to necessarily complain to the people who sent it to you, the merchant. The credit card company is equally liable. They have to give you the money back. them. You can go straight to them and get the money back if you don't want to faff around with the other guys. Obviously, you can do either. You can choose either way. But it's a really good backup if for some reason a company goes bust, for example, and there's no one there to try. Now, this works, this Consumer Credit Act, Section 75 bit, works if there is a direct link between you over here and the merchant here, and all that goes between them is the card. So you give the card, essentially virtually or physically, to them, they snap it away, they use it, and you've got a direct contact with them. If you suddenly bring in a third party in the middle, and often that's a travel agent or PayPal, then it breaks that link. And that means it becomes a bit of a grey area, and a lot of the time it means Section 75 doesn't work. I don't know for certain exactly, I can't remember off the top of my head how that applies to the likes of Apple Pay, Samsung Pay and Google Pay. You probably will be okay because I think you are making still a direct, you're using a device, but you're still paying with the card. I think it's more like it's just a system they're using. Although actually, you can find tills which count as a third person sometimes and break that link. It's all a bit of a mess. It's a great thing to have, but you shouldn't rely on it because it can be a bit of a mess. But I'm sure that's something, if you do a quick Google, you will find that information directly. So if you're on a Samsung phone or a Google Pay, they will tell you there if that kind of breaks that connection or not. I mean, I think I've written about it somewhere in the past. It's just left my head at the moment. Where are we? Cool. Okay, right. I'm going to try and get through as many of these as I can. Steve has said, do I know what's happening at WireX? I'm afraid I don't know what's happening on there. Not much help. Sorry about that. I don't even know what WireX is. I'll write that one down as well. So let's find out what WireX is, and I can look into that one as well. Anya says, I have 3 Halifax reward accounts that give £5 a month. Is it a good idea to have 3 reward accounts? That's 180 quid a year for really no work. So this is really interesting because someone else got in touch with me recently and they told me that they also had multiple reward accounts. Now, when I've contacted them directly, Halifax directly, they said you can only have 1 of these. But a few people seem to have got it. So whether it's a bit of a fluke and it's just happened, or maybe they've changed the rules. So I'm going to, again, write this down. I've got my pen, you see. I didn't have my pen. I would forget things week on week. I will have a look because if that is something that we can do, that is easy money. In fact, you might want to save £5 a month on one of them, 3 cinema tickets, you get 12 tickets a year, or 24 movie rentals on another one. You know, just mix it up a little bit. So I will look into that more, but that'd be really interesting, Anya. Thanks for reminding me about that one. Nadine has asked, what high street bank do I recommend currently leaving Barclays? Well, it depends what you want, and it depends how many other current accounts you have right now. This is what I personally would do, but this might not be the right thing for you. If I only had a single Barclays account right now, I would switch it to Nationwide and I would get that free money, 100 quid, boom, right? Free money for nothing, fantastic. I would also open up separately a Starling or Monzo current account and I would use that for my everyday spending. Now, I might keep the Nationwide account as my kind of home account, so to speak. So my salary goes into there, maybe my bills go out of there. But my kind of spending money, the money I want to put aside for the week or the month, however you want to budget. And if you don't budget, this is a great way to start doing it. Transfer that over in a lump sum. And this is great because those apps will help you track your spending. It's a really useful feature, which I would definitely have a go at. Then beyond that, if you want other accounts, there's no reason why you have to stop at those 2. You can open a 3rd account, a 4th account, a 5th account. The 3rd account that I probably would suggest for people is the best bet is the Santander 123 Lite account because this earns you cash back on your bills. As long as you're paying council tax, energy, TV, broadband, mobile, water, you get money back on that. There is a fee, a £2 fee every single month, but the cashback you earn will be more than that. So it's money for nothing. You may as well have that. And it's nice again for budgeting to have an account which just looks after your bills. Beyond that, then I would be looking at the Halifax reward account that we spoke about just now. Again, you earn money, you have to jump through some hoops, but you can get 60 quid a year from that. And there are other accounts which give similar ones. Again, loads more information about this over on the website, and I do a regular banking update. So hopefully that was useful to you, Nadine. We've got, where else we've got here? So Tan Mayer says, is there something you could do if you just can't get any credit card? So I guess the question here is, why do you need a credit card? If it's because you need to borrow money and you're in a situation where, if you don't have a credit card, you don't know what you're going to do, then I would go and talk to someone who will offer some free debt advice. Someone like Step Change, National Debt Line. There are lots of organizations like this who you can just go to and they will help you get through it. So if that's the situation, that's more important than getting a credit card. So if you get a credit card, you're just going to get into more and more debt. And likewise, if it's a short-term fix, because it's something you need to know, but you know you're going to be right longer term, and a credit card will just help you do that. Again, there might be alternatives you could look to. The Nationwide Flex Direct current account we mentioned before, that can give you a 0% overdraft, although likelihood if your credit rating isn't fantastic, you might struggle to get that overdraft as well. And beyond that though, if it's about getting a credit card to try and boost your credit score, first would say, have you gone into an eligibility checker and on a comparison site and just seen if there are any that are available to you, any which are kind of some really, really basic cards. They won't have much of a credit limit, but it's a small amount, maybe 200 quid or something like that, just to give you that opportunity to pay some money every single month on that card and then pay it off and demonstrate your ability to do that. If you've done that and there literally are no cards available there, and in fact you should do this anyway, is to go through some simple tips, simple things you can do to strengthen your credit report. So are you registered to vote? Have you checked it to make sure your address history is correct? There are other ways as well. You can sort of get some credit building tools. Sometimes that's around your rent. So you might be able to pay your rent and have that reported to your credit report. Might take time, but all of those things might make it easier for you then to get a credit card at a later date. So hopefully that was helpful for you. M has asked, how often do you recommend switching current account given the number of incentives different banks will offer? So there are a couple of things here to consider when you are switching. As I mentioned before, every time you do open a new account or switch a current account, your credit report will be checked. So that will have an impact, as we talked about earlier on. Now, it's not a big thing if you've got a decent credit report and there's nothing major coming on, but it is worth bearing that in mind. But I would say, and I've done it in the past, I mean, I would imagine someone who are really good, like an excellent credit score, everything's going fine, nothing major coming along. Again, I can't promise you that everyone's different and every bank is different and every credit report is different, but there's no reason why you couldn't possibly do it every couple of months. Just bear in mind, when you apply, your report, your score will sort of drop slightly as a result. In terms of what offers there are available, let's look in the last year off the top of my head. We've had Halifax, we've had HSBC quite a few times, we've had First Direct, we've had Metro, which was a referral offer for 50 quid. Obviously, we've got Nationwide right now, and we've had Virgin. So that's at least 6 switching offers that have been running in the last 12 months. I think possibly there was a NatWest one as well. So that's 7. I mean, ultimately, after a time, you'll run out of these switching offers. And they do tend to come back. No guarantee they'll come back, but you might be able to keep doing that again and again and again. Darren has asked, Darren asks this every week, does having an overdraft affect your credit utilization score? So I've been looking into this, Darren, and I haven't got a concrete answer for you. I've read sort of contradictory things. I've read some things that saying that it's not taken into account and others saying that it does get taken into account. So I'm looking into this a little bit more for you. Ultimately, though, if you don't use an overdraft, if it's sitting there unused, that shouldn't have any impact on you at all. Obviously, if you are using it, then that will count as a debt. So it will impact your credit report anyway, because people will say, look, they've got an overdraft and they're not paying it off, they're not clearing it, they're relying on it. So that will have a negative impact for negative signals to future lenders that you might apply to. So it's certainly one to avoid using it. And also it's very expensive using overdraft if you don't have to. In terms of credit utilization, as I said, I've seen different things, so I will keep researching that one for you. Daniel said, silly question, but can you open a savings account without a current account just so I can transfer savings? Yes, you absolutely can. Really easy to do this. In fact, I did it last week, opening up a post office savings account, and I also opened up a Moneybox savings account simply to take advantage of direct debits, to take advantage of that nationwide offer. So you don't need to be a customer with so many savings accounts. In fact, lots of savings providers don't have current accounts, so you can do that. That's fine. So we're really short of time here, guys, so I might have to wrap things up. Sorry for those of you who are at the bottom. Very quickly, Charles has said Skipton is the building society offering 3.5%, maximum 250 quid a month that can go into them. But Charles, good news for Charles, already has an ISA with them, so you can take advantage of that one. And that is, well, the best interest rate you can get right now on any type of savings, which is fantastic. I think that's probably all we have time to end on. Yeah. Sorry, guys, if I've missed your questions. Next week, I'm back. Same time, 7 p.m, Tuesday, the 31st of August. If you're here at the top, you're much more likely that I will be able to answer your question. Apologies if I have missed anyone on there. Don't forget as well, if you haven't already, do join the Facebook community. Head to becleverwithyourcash.com/community. That's the short URL that will take you there. Apply to join, and that's a great place for us to keep talking when we aren't here. When we aren't on the live, We can be over in Facebook talking throughout the week. You can ask your questions, you can share your tips, you can help everyone else out. It's a really great place for us to be. And also there's that newsletter every single Thursday, the best of the website, the best of the YouTube, the best of the podcast. Sign up for that, becleverwithyourcash.com/newsletter. It's free, it won't cost you anything, but you will get all the information that you need. Right, guys, thank you so much for watching. A long one this time, but I love doing this. It's difficult to tear myself away from it. I will see you guys in 7 days. Enjoy the bank holiday, and hopefully you've got some nice plans. All right, cheers, guys.